conversation with the pioneer of technical analysis in India, only on ET Now.
Dr. Narayan, to you.
We've had a fairly swift decline once the morning low of about 53.90 was broken. So I think a lot of stops were maybe staggered around those levels, which is why you had this fairly swift decline. So I don't see any support still, at least about 5300 is reached. See, the market is really moving in 100-point parcels, right? So it comes around 5400, churns around there. Now I think it's clearly moved lower than that. 5300 seems to be on the cards. So I think we are just going in 100-point parcels. And absent any other trigger and any real value buying emerging, I think this sort of situation is set to continue.
With that triangle between 5400 to 5600 that we have taken, though we had a premium inflow of 100 odd bucks, that's still coming in, inching towards the lower break even.
Yeah, I think, you see, we had sold the 5400 put, and the total amount we realized out of this triangle was 115 to 118 rupees. The 5400 put itself is trading now at 115, so it's now time to surrender that as a position because it's clearly not working out. You can keep the 5600 short as a call because that's trading at about 20 odd rupees, and that will salvage a bit of money if at all. But you know, the normal rule of the thumb is that when one of the sold strikes trades at the premium, you should close it out. So that is what is happening. 5400 put trading at 115. Close it out, no profit, no loss for the moment. It will no doubt leave an open leg, which we shall deal with a little later as the situation emerges.
Any new strategy then on the index today?
I was actually in the morning thinking of suggesting a bear spread using puts. At that point of time, you know, things were a little more sedate. And the 5400, 5300 put was priced rather attractively at about 36, 37 rupees. But with a sharpish kind of fall, you have 5400 put trading at 115 and 53 at about 70. So it has now looked up to something like 45 to 46 rupees. It's still not too bad, but I think if it were to pull back to somewhere closer to 40 levels, one could initiate a bear put strategy. Long 5400 puts and short the 5300 puts. So you will have a maximum payoff if it were to finish lower than 5300. Of course, it's a little early in the month to talk about payoffs at expiry. So we will be looking to take this trade off in between. But at 45 or closer to 50, it doesn't make it really too attractive. So I think this is a strategy which I would suggest, but then only if it pulls back. Otherwise, we simply let it go. We just close out the short put leg of this triangle and we wait for some other situation to arise.
All right. Dr. C.K. Narayan, thanks very much, gentlemen, for joining in on this leg of the F&O show.